Okay, everyone, welcome back to the channel. Matt with Green Bar Trading. So, what I'm going to go over is I'm going to go over my couple of trades I took. It's it's there's a lot of time left in the market, but it was a very choppy opening session here. So we're about 2 hours in, and direction never became clear. So when it's trading in a range like that, you can get stopped out really quickly before the move happens. The move that you had a feeling was going to happen, you get stopped out. It happens after that. It's very frustrating to trade. So it happens to be a beautiful day up here in the Northeast. It's probably 40 degrees, maybe 30 degrees warmer than it should be at this time. So we're in the mid 70s. Beautiful day. So what I'm going to do after I go over a couple of things with you guys, because I want to show you what we have coming up. I want to show you the bonds, the dollar, the VIX, the market. I'm probably going to shut it down, enjoy the weather, get out there, and maybe play a little golf. I don't know, whatever I want to do, because it is beautiful out. So let's get right into it. We're looking here at the economic calendar. So this is something I go over every morning with our Discord. I go over it in our weekly watch list. Guys, this is the key. You need to know when economic data is coming out. So tomorrow's election day. That's a big one. It's not economic data, but it is a big day. The markets tend to rally into year end after a midterm. Doesn't mean it has to happen. Historically, it has happened. And if you guys know me by now, you know I love to follow those patterns. That being said, you can't come in, especially on a day on Thursday where we have CPI, and think, your bias is long, because historically, after midterms, it has been. This is a different year. It really is. I mean, everything hinges on economic data. I've never seen a market so macro algo traded for every single thing that comes out. So you have to be aware of the economic calendar. The bonds. So this is the bonds. The bonds are going down, but the yields are going up. So the 10-year right here sitting at 4.19, still more than that 3-month. We saw it invert a few days last week. So while we're testing those limits, we are not inverted with the 3-month as of right now. But the yield curve, the long term versus the short term, is very inverted. You have the 2-year at 4.72. You have the 10-year at 4.19. All that suggests is that the bond market is anticipating the potential for a recession coming up. So that's more long term. We're more focused on that intraday sort of day trading type of stuff. So that's that. Getting into where I sit on the day, just got chopped around. And that being said, even though I got chopped around, my key level on the Russell, this is what I trade. I mean, guys, to the penny. Key level to the penny. Where did I get that key level from? That's what I'm about to show you. So the trade would have been to be patient, right? Be patient. If you see price coming on down, you do get these bounces, but you can see the 9 EMA is rejecting the whole way down. All that means is the momentum. If you can't get over that 9, that momentum is driving down to where price wants to gravitate towards. And on the Russell, that was the 1795 level. But key levels we post on the SPY, on the Qs, in our Discord, on the ES every morning. So where we get these key levels for, it doesn't matter what you're trading, you need to know how and when these key levels can be very important. You can see on the SPY, very key level, nice level there too. So where did I get this on the Russell? Coming over here. Let's look at this. Yep, this is perfect. So the level we're looking at is this 1795 level. I'm going to make this a little thicker so that you guys can see. All right, clear as day right here. You have a huge supply zone there, right? As price hits it, instantly sells off big time, suggesting there's a lot of supply that got sold off there. All right, so as we're coming back up to it, right here, we break through it, and then zooming in, it was used as support. So when something breaks out of a key level, a lot of times you'll get a retest, and then we can do our thing. Again, right here, another retest, showing that there's demand at this spot, at least for this time being, demand at that spot. This is a key level for me, all right, when I see things like that. Right here, you have the FOMC. The FOMC ripped up to a key level, dropped and broke our level, but still was hanging around here. So now you're at that resistance again. You're at resistance again. All right. And then you get chopped around here. And then important over here in the pre-market, this is a Globex product. Right here, this is where it bounced again. Guys, this is the makings of a key level. And I don't think I have to show you guys right here again. This 1795 saw the bounces today. All right. Zooming in on that today, you can see here, we ripped up, trapped the bulls. They sold it off into the key level, got a nice bounce. What I like to look at here is VWAP. VWAP was resistance at first. Resistance here for about 10 minutes or so, and then broke out of VWAP. But VWAP, usually when it sells off, you get it a nice bounce at a key level. This is a good target area to take a really nice trade. If you're somebody that can be patient, wait for that level, and see this without getting out, which I can't do that. If I see a move from 1795 in 4 minutes going up almost 10 points, that's a $500 trade right here. I usually will like to take my profits off. Nothing wrong with locking in profits. But it came back down, it pulled back, got support at 1800, and then ripped up to a nice price target. So if you wanted to, if you're more of a intraday, you can hold it for a little bit longer. This is what you would want to do. You take a trade from here, from support, you take it off right here at VWAP. Came back down to support. What is this pattern? This is a double bottom. A double bottom pattern usually will lead to a breakout. So another nice area to get long. All I did was chop around, take 13 trades like a knucklehead instead of just waiting my turn. It would have been so much easier to do. So that's why I'm coming on here. You know, it's a lot more clear when you're making these videos after the fact. You can see the SPY was very choppy at the time. But this one, the Russell, this was a very nice pattern. A lot easier to trade than taking a look down here at the SPY. This is a 5-minute chart. How do you trade that? How do you trade this? This is just chopping. Yes, it is making a series of higher lows, so that's a good thing. It is coming up here to this double top. So you have a double top up here around 379, 378 area. So maybe that can be the next spot to either see a rejection, or maybe that's where people will take, for a setup for another breakout. I don't know. The market is up 0.4%. That's not bad ahead of really key data coming up. So, I don't really expect much movement in the market, although, with the election day tomorrow and everything else, who knows? Anything's possible. But, looking at the VIX is making a series of lower lows, lower highs. That's good. The market will go the opposite way of that. And then if you're looking at the dollar has basically, let's look at this on a bigger time frame. So look at this. The dollar right here, this is coming down and actually bounced off of this trend line. So if we can, we might still go up, but if we can break this to the downside, that would be good for equities. But right now, I would be watching this because that is a clear trend line. Very clear. This would be the third touch of it. And if this does go up, that is not great for the stock market. So these are all the things that I like to look at. The dollar, the bonds, the VIX, SPY, where VWAP is. There's a lot that goes into it. So anyway, guys, hit the thumbs up for the video, and I will see you back on the next one. Take care.